Most people spend more time shopping for a new car than they do choosing a financial advisor. But here's the problem. The wrong advisor can cost you hundreds of thousands of dollars over your lifetime in taxes, fees, and costly mistakes. So before you hire anyone, you need to know what questions to ask. I'll give you 6 must-ask questions that you can instantly use to help you identify the best advisor for you. I'm Nick Grose, financial advisor with Grose Wealth Management, and I've seen firsthand how these 6 questions can make or break your financial future. Let's dive in. Working with the wrong advisor can cost you in 3 ways. It can cost you in time, money, and peace of mind. It'll cost you in time because you'll spend years cleaning up the mistakes. It'll cost you in money because poor planning often leads to higher taxes and taking on excessive risks. And it'll cost you in peace of mind because you'll always be wondering, am I really on track? Working with the right advisor brings the opposite. It brings long-term trust, alignment with your goals, and better outcomes, not just financially, but for your entire family's future. Working with the wrong advisor is like hiring the wrong contractor for a home renovation project. It'll cost you more money, cause more stress, and you might not even like the end result. The right advisor, like the right contractor, gives you confidence, a clear plan, ongoing communication, and results that actually fit your vision. Before you even get ready to ask a financial advisor these questions, you need to be clear on what you need help with most. Some people just want investment management, but most retirees also need estate planning, retirement income planning so your money lasts your whole life, tax minimization strategies, and planning for long-term care needs. Advisors aren't one size fits all. You wouldn't go to a cardiologist for a knee surgery. The same idea applies here. So step 1 is to clarify whether you want someone to simply manage your investments or a full partner during your entire financial journey that can provide the full comprehensive services shown here, among many others. So the first question, are you a fiduciary 100% of the time? This is the number 1 question. Fiduciary means they are legally required to act in your best interests, not sell products for a commission. If the answer isn't a clear yes, I'm a fiduciary 100% of the time, that could be a red flag. Not to say that someone who's not a full fiduciary could just be a good human and want to help you out and do what's best for you, but they could have some conflicts of interest. An advisor who's not a full fiduciary could have incentives to sell you products from investment companies to get a commission check. The second question, what is the total cost to work with you? Don't just ask about their fees. Also ask about potential hidden costs, such as trading fees, fund expenses, commissions they might earn, tax inefficiencies, overinsurance, or holding too much cash. If you don't ask, you could be paying more than you realize. The third question, what experience do you have helping with retirement income planning, Social Security, long-term care, and other services beyond just investing? Investing is just one piece of the pie, and retirement is about money that will last your entire lifetime, while still leaving behind a legacy and managing for healthcare costs and protecting your family. If an advisor can't explain how they help with minimizing taxes, Social Security strategies, or estate planning, you're only getting half of the picture. The fourth question, how are you going to minimize taxes for me? Taxes are often your single biggest lifetime expense. A good advisor helps you manage and minimize the total amount of taxes that you pay to Uncle Sam over your lifetime through strategic planning. It's not as much about how much money you make, but more so about how much of it you actually keep. The fifth question, will I be working directly with you as my advisor over the long term, or will I be handed off to some junior advisor or another team after our initial meetings? Many firms will hand you off after the first year to a junior advisor, or worse, a call center. You want to know if the person with whom you're building trust is actually the one guiding you. Imagine getting ready for an important surgery. You meet and choose a surgeon, and then on surgery day, a new kid out of medical school walks in. That's what can happen at some larger firms. Building our business here at Grose Wealth Management, I'm working alongside my father, a 30-plus year financial advisor, and he's worked with some of his clients for more than 20 years. They had one person to call, someone who knew their goals, their family, and even their fears. And that one trusted voice helped them with all their financial needs. And the last question, will you advise and guide my family, my spouse, my kids, and my grandkids? This is one of the most overlooked questions. A great advisor doesn't just work with you. They help your family understand your wishes and carry on your legacy. In our practice, we always try to meet spouses and adult children right away so the whole family understands what is going on. That way, if something does happen to you, they already know us and they know the plan. For most people, the true measure of success of a financial advisor isn't just the numbers. It's having the peace of mind knowing that their family will be cared for when you're gone. And if you want a second opinion on your current advisor or just want to make sure your plan is on track, feel free to reach out on the link in the description to schedule a free financial strategy session where my team and I will talk with you about your current financial situation, your long-term goals, and answer your hardest questions to help get you on track. Thank you for watching, and I'll see you in the next video. Nothing stated in this recording should be considered financial advice. Always consult with a financial, legal, or tax professional.